major difference between mortgage rules and mortgage rates and how that impacts our buyers from a realtor's perspective and a mortgage broker's perspective. Stay tuned, don't forget to watch the whole video, and of course, please remember to like us, follow us, and subscribe to our channel. Hi everybody, this is Jarek Krasinski with Team YBR at Remax Quest Realty, and this is Pauline Tonkin with Blue Tree Mortgages. And we're talking really about mortgage rules versus mortgage rates. What does that mean? And how do these sort of rule changes, not just rate changes, but rule changes impact the average buyer? So Pauline, what do you think about upcoming mortgage rule changes? What have you heard about? What should we sort of appraise the buyers of in terms of what's coming through the pipeline?
Yeah, well, the government just announced, there was an announcement earlier this year that they were going to be making some further changes to the mortgage rules, and then the formal announcement came out this week. So last year they changed the rules around, or enhanced the rules around insured mortgages. So anything that is insured through one of the major insurance companies, CMHC, Genworth, or Canada Guarantee, those rule changes have been in place for some time. So now, conventional borrowers, so someone who's purchasing with less than or more than 20% down, is a conventional borrower. Those rules are going to change effective January 1st, so that has been determined. So whereas previously somebody could purchase something with 20% down, they could get access to a 5-year fixed rate at the contract rate. Now they will have to qualify at the greater of the benchmark rate or the contract rate plus 2%. So what does that mean? The benchmark rate is currently 4.94%. Contract rates, the rates that you can get, best prices out there, say it's around 3%, just for easy numbers. So qualifying moving forward as of January 1st would be 3% plus the 2% bump, so 5%. So you'd have to qualify for the mortgage as if the rate was 5%, even though the rate is maybe around 3%. So that 2% bump is going to have an impact on people qualifying for purchases. The rule changes last time were about 10 to 20% difference in buying power. So they just lost up to 20% in their purchasing power. They can qualify for 20% less.
I've heard lenders responding to these rule changes sometimes by contacting mortgage brokers and banks saying, hey, where are the mortgage applications? We don't have a lot of these less qualified buyers, and we have programs that are not being utilized because now on the other policy side of things, the rules have changed. So what is your experience in terms of the forecast on whether that will happen again?
We've definitely seen last year when the rules changed, all of the insured lenders, like sort of the non-bank lenders, they saw a sharp decline in their business in terms of mortgage applications. So their response to that was adapting their programs and offerings to keep their rates competitive. So in other words, they went out and got money from different investors and different sources, sometimes within the banking industry, to be able to have money to lend out to people at more competitive rates to keep business going. Now that every lender is going to have to qualify under the same rules, banks, credit unions, and the mortgage lenders, the mortgage companies, they're all going to be in the same boat. So it's going to be kind of interesting to see how they adapt to it. I have some thoughts on what that might look like, but I'm going to sort of hold that back and wait and see what I'm hearing in the industry over the next few months, and then be happy to share that with people. But for right now, yeah, we're definitely going to see an impact on that, and they're going to all have to vie for lesser of a piece of pie business. So it's going to be interesting to see where that takes rates moving forward, how programs are going to be redefined and readjusted. We'll see.
Okay, so time will tell if the market will become more competitive. Mm-hmm. There is often a rule change and sometimes a small backlash of advantage towards the buyer. So, we don't necessarily want to alarm you in any way. Having said that, it's always good to know you have current information. Pauline has a really terrific newsletter that she sends out. I think you send it out on a monthly basis, right?
I try to, yes.
In terms of what's going on
Absolutely.
Out there. So if you don't know what you don't know, because oftentimes first-time or second-time buyers may not know what's going on in the mortgage industry. If you're not aware of what you don't know, it's nice to sort of see some broad topics in the newsletter and then use that as a springboard to actually start the conversation. So don't feel pressure in contacting us right away, with asking, maybe you don't want to take up anyone's time or what have you. By all means, we encourage you to do that. It's not a waste of our time at all. And at the same time, if you're shy and you want to look at newsletters, Pauline has a tremendously useful newsletter about what's going on in the broad real estate market out there that I think you would find.
Yeah, so you could just sign up for that on my website, and my website is on the post here, and so just go on there, sign up for the newsletter, and if you have any questions, certainly let me know.
Thanks very much, everybody. All the best and enjoy shopping out there.